Fourth quarter numbers, net loss of 7,700 crores. A large part of the street was expecting a loss, but at 7,700 crore, it has come in above most of the expectations on the street. We're trying to get by some more details as far as the provisioning. Right, we have Abhishek with us. Abhishek, tell us.
So the gross NPA is at 10.91%. That compares to about 10.35 in the previous quarter, while the net NPA is at 5.73%, which compares to about 5.61%. So this, in terms of asset quality, is not much of a deterioration that we are seeing, because the overall gross NPA in absolute value is close to 2,23,000 crores, which compares to about 1,99,000 crores. So that's a rise of about 10 to 11% in
taking a look at the
value.
Provisions, Abhishek, provisions and contingencies are close to 28,000 crores. That compares with 18,000 crores a quarter ago and 11,740 crores a year ago. And provisions for non-performing assets included the above are 24,080 crores. That compares to 17,760 crores and 10,992 crores on a year-on-year basis. So we have...
I think the most important number is the increase in GNPA. From 1,99,000, it has gone up to 2,23,000. On the face of it, that is a rise of about 24,000 crores. If that is what you take as additional slippages, I think that is way lower than what the street was expecting. And therefore, I guess you really will have to wait for what the company has to say. This is not the right way to look at slippages. Right. Because you have not put in recoveries, upgrades, write-offs, the whole lot. But, you know, the total difficult loans, if you take what was an SDR, S4A, the total restructured but not yet recognized, was as high as 50 to 55,000 crores. So of that, if, you know, they have not recognized a goodish bit, then that's not good news. Let's wait and see. Maybe they have recognized more slippages, but there are better write-offs.
Gross NPA divergence is at 23,000.
That was reported in the previous quarter.
Oh, so they're just repeating it.
They are repeating it. See, the NII is at 19,974 crores. So we were working with a number on NII at 19,474 crores. So it's an uptick of 500 crore. It's a beat. The NII is up more than 500 crores from our poll. So that has declined by 5.2% YOY. But it has improved by 6.9%. If you look at the net income, the main driver is the other income. So the other income is at 12,495 crores. That is an uptick of 54.5% on a quarter-on-quarter basis. So overall, while the NII beats our poll, the other income is actually driving the top line.
Okay. No, I think the market must suspend its judgment on the SBI numbers. We just have to hear the management. I mean, 28,000 crores of provision looks very good. But, I mean, what was the provision last time? 20,000 crores, right?
It was at 17,760 crores. That's for provision for NPA. So, provision for NPA has increased by 35.6% on a sequential basis to 24,080 crores, which compares to about 17,760 crores.
So that's a 35% increase. Now, that doesn't look like a great deal of fresh slippages have been recognized. If they had, then there would have been a much higher provision cover. Because first time NPAs have to be provided for significantly. Is there any mention about whether they have whether they are pulling off the cover on mark-to-market losses? Because last time they provided for 3,400 crores of mark-to-market losses on government bonds. Now they have the option to spread it over 4 quarters. So it's quite possible that provisions have taken all these adjustments into consideration. My sense is it is too soon to react on the SBI numbers. We don't really know how much the slippages are. The total difficult assets were as high as 52,000 crores. If 70% of that were recognized, it would have been about 35,000 crores. Now, to that extent, the NPAs should have jumped. But the GNPA has gone up by 24,000 crores. We will have to see how much of write-offs and upgrades have happened. At the moment, we can only say, well, it's not a shocker of a number. But really, let us wait for what we have to. 3% of their total book was restructured but not recognized as NPA. All that clearly has not been recognized. Some of it has been recognized. So let's wait for what the bank has to say. It's too little information to really react.
Lata, coming on to balance sheet numbers, deposits at 27 lakh crore has grown by 4.7% YOY and about 2.1% sequentially. But leave the deposit aside, the advances growth is pretty strong when you compare on a sequential basis. So the overall loan book is at 19 lakh 35,000 crores, and that is an uptick of 6% quarter on quarter. If you remember, for Q3, the loan book had declined by 3.5% when compared to Q2's numbers. So sequentially, the loan growth has picked up, and 6% is a healthy number considering the fact that...
What's the YOY picture though?
YOY is, down by 0.9%. So that's not much of a downtrend, given the fact that, loan growth would have been worst off, and, the 6% looks much better than what they did in the previous quarter.
Okay, well, if there is no loan growth, do you have the deposit growth numbers?
Deposit I mentioned, it's at 27.06 lakh crore, and that's an uptick of 4.7% YOY and about 2.1% on a sequential basis.
Okay, well, so, if the deposits have not grown so much and advances have actually remained flat year on year, then the higher NPAs must show in a higher percentage. Why is it that the percentage is only showing up as a rise from 10.3 to 10.7, is it? 10.7%. That is my big fear. Is it that the entire NPA or entire stressed book or much of the stressed book has not yet been recognized? One will really have to wait and see how much the slippages are and how much is from the stressed book before you can be very sure that SBI is out of hot water.
All right, we will have to wait by, and it doesn't look like we'll have to wait for too long. The press conference should start in about 10 to 15 minutes. That is the slated time. But I believe we have Sanjeev Bhasin with, we have Manish Agarwal with us. Manish, the limited numbers that have been reported so far, what do you make of SBI's performance in the fourth quarter?
Yeah, see, though the PAT numbers, losses are more than what we were expecting, but at the pre-provisioning level, numbers looks quite okay. So the NII growth has been quite okay than what we were expecting. Same is the case with the operating profit number as well. As far as asset quality is concerned, I think numbers are by and large in line with what we were expecting. We'll still wait for the slippages number and the source of the slippages because that is more important. As we understand, the watch list at the end of Q3 was almost 50,000 crore. We need to see how much has come from that. That should be the main deciding factor about the numbers.
Okay. Well, maybe you want to, Abhishek, mention your back-of-the-envelope calculation of, fresh slippages if you go by the extent of upgrades and...
See, if you look at the provisions for NPA, now that is at 24,080 crore, and you look at the PCR at 66.2% versus 65.9%, the slippages can work to around 36,000 odd crores. Now, we don't know what is the quantum of write-off and what is the quantum of recovery and upgrade. This is just by the theory and may not be this number, but it looks like slippages may be on the elevated side if at all provisions for NPA have been done for the current quarter. There can be aging of NPAs which can lead to, further rise in provisions. But if I do back of the envelope calculation, the slippages can be at and around 35,000 crore plus.
My own feeling is if it is indeed 35 or 36,000 crores, then the bad news is already out. Because if their difficult assets were 50 to 52,000 crores, 70% of that would work out to about 35, 36,000. So if the slippages were indeed 35, 36, I would consider that good news, but we have to really wait to see what the management says. Sanjeev Bhasin has also joined us. Sanjeev, from what you know, what have you made of the numbers?
So, Lata, on a book of 20 lakh crore is what their credit book is. They had indicated a 2% slippage. And if you are saying it's something like 35,000, then there is a write back. It's a very positive number, I would say.
No, we are only doing back of the envelope calculation. The bank has not yet told us the slippages. All we know is that the GNPA has increased by 24,000 crores from 1.99 lakh crore to 2.23 lakh crore. We don't know more than that. The rest of it is only guesswork. But from what you are seeing in terms of an NII, which has come largely in line with expectations, around 20,000 crore compared to an expectation of 19,500, and a gross NPA, a total number of 10.7%. What are your thoughts?
Correct. So if you recall in the morning, I had indicated to you that I think the net interest income will beat all estimates. Closer to 20,000 is really remarkable for a quarter which has been tough. It also tells me that PCR ratio has gone up to roughly 67%. So I see no reason for disappointment. And I think that the write back of the other NCLT cases in the quarters to come should be the red herring for most of the PSU banks. So I would take it with a pinch of salt and be on the positive side. As a disclosure, we have a buy on State Bank on decline.
Okay. I think we're getting some information from sources only that the slippages may be 33,000 crore, but we haven't yet got confirmation from our sources. I think Sanjeev, just stay on. We have Ashwini Gujral also with us. Ashwini, anything the charts are telling you?
See, the State Bank stock is taking the results very positively. It's up 4.5%. Not only that, all PSU banks are now rising. I think whatever the management, etc., says, the market is positioned to accept good news, and possibly Bank Nifty could close at the high point of the day. So that way the market is not waiting for any sort of clarifications. It's moving on. And whenever SBI does 8-10% move, I think Bank Nifty does fairly well. Okay.
All right. That's important that the SBI stock has definitely taken it very positively, up 5.5% now. Okay, here's a sentence on the stressed assets, but it's not giving away too much. The Reserve Bank issued a revised framework of resolution of stressed assets, superseding the existing SDR, CDR and other structures. Under the revised framework, the standstill benefits for accounts where any of these schemes have been invoked but not implemented were revoked, and accordingly these accounts have been classified as per the current RBI prudential norms. So all those which were under CDR, SDR and S4A have been recognized as NPA according to this, this notes to account, this note to the accounts. It looks like, therefore, that most of the bad news is priced in, and that's why the market is taking this very positively. But let's just wait for confirmation from the company itself. We should be having the company joining in at the press conference very, very soon.
Absolutely, Lata. No further details apart from the fact that the rub-off that SBI's 6% move has had on the other PSU banks. Pull up something like a Union Bank up 5.5% from lows, Canara Bank, Bank of Syndicate Bank, Bank of India, Bank of Baroda. All the banks on my list right now, all the public sector banks on my list, all of them spiking, just the way Ashwini pointed out. As far as the PSU bank index is concerned, was outperforming yesterday as well, and SBI's 6% up move lending a good hand to the other PSU banks. The PSU bank index is actually at the high point.
They made another disclosure that until now they had provided for 50% of the cases that were under NCLT. Reserve Bank allowed you to pull it down to 40 and bring it back to 50 by June. So accordingly they have reduced. Oh, there come the fresh slippages. It is indeed at 33,670. Now it looks like most of the poison is out.
Lata, this is the fresh. So on fresh, you can add about 900 to 1,000 crores. So that will become your gross slippages. As we have seen the trend with other quarters, like over there, you see fresh slippages is at 25,836. So while the actual slippages was 26,780. Yeah. So about 900 to 1,000 crore can be added, to get a gross NPA. So what I was saying is 35,000 crore of slippages. If you look at the provision, it is in line that 35,000 crore is the kind of gross slippages that has actually come in.
For me, the good news is they accepted in a public announcement that they have about 51 to 52,000 crore of assets under various, SDR, CDR kind of schemes, of which they expect about 60-70% to slip. Now that works out to 35,000 crores, and that's 34,000 that they have recognized. So going by what SBI has said in the public domain, that about 65-70% of their restructured assets will slip, this 33,670 looks like almost all of that. Now, the only confirmation we need from the bank is that this entire 34,000 has come from those 51,000 crore of restructured assets. If some of it has come from outside, then we can have further slippages. But otherwise, this looks like a very good number. It looks like whatever they told us are difficult assets, 70% of them have been recognized, and that's what the bank said. that we expect about 70% of those assets which are under restructured book to be slip. So it looks like most of it, if not all of it, has been recognized, and therefore this should go down as a good result. But again, we are awaiting the company to come and clarify that. Sanjeev, if Sanjeev Bhasin is still with us?
Don't think we have Manish Agarwal with us.
Okay. Manish, any further thoughts? Fresh slippages at 33,670 crores?
I think the numbers are largely in line with what market was expecting. Again, we need to check how much has come from the watch list. My understanding is that out of 50,000 crore of watch list at the end of Q3, at least 25,000 should come from that book, because the balance 25,000 is 525, which should not be an NPA in this quarter at least.
Okay. So would you say, therefore, that this is the peak in terms of additional slippages, and that in the April-June quarter you must expect much lower slippages? The bank's own guidance was that for full of FY19, the slippages will be about 2% of the total book.
Yeah, so I think the 2% guidance for FY19 was, considering the fact that in Q4 bank will book most of the stress assets as an NPA, and I think now most of the watch list is getting dissolved. I think 2% is the likely number for FY19.
Okay, so you have a buy on the stock now, or
yeah, we have a buy on the stock.
Okay, all right, Manish, thank you very much for joining us. If he is giving some more information, it is saying it's FY19 watch list. Okay, actually, if we can get Manish back,
yeah,
the
FY19, it can be FY.
It has to be FY19.
18. At the end of FY18, they have to do.
Okay, that's what. Yeah. Okay, fair enough. The watch list as of to date is 25,800. Now that means we have to still watch out for perhaps of that old list. Only half has been recognized.
Okay, the gross slippages have come in at 32,821 crore. So there is a bit of recovery in terms of slippages intra-quarter that might have been done. So when you compare to the absolute value of 26,780 crores, the slippages have come in at 32,821 crore. And if you look at the overall total reductions, that has declined substantially. That is at 8,535 crore, which includes recovery, upgrades and write-offs, and that is at about 8,535 crore, which compares to 13,754 crore in the previous quarter.
No, I didn't get it. So what, is it good or bad news?
The recoveries and upgrades are a tad bit on the lower side when you compare to previous quarter. That is a bit bad. And while the slippages have continued to remain elevated, but there are 32,821 crores, so the amount is elevated, but Street was working with a 25 to 30,000 kind of a number.
Okay, well, they are saying that there is another 25,000 which is on the watch list. So we know that the old watch list, if you counted all the restructured book numbers, was around 51, 52,000. So only out of that, 25,000 has been recognized. 10,000 crore perhaps, or 8,000 crore has come from outside that list, or so it seems. But there's another important matter I want to draw your attention to. The auditors have qualified the commentary. There is an emphasis of matter that they have added. It is not that they have modified their comment, but there is something called emphasis of matter, which is 1 degree of caution on the accounts before signing off. But it's relatively minor. It is about an unamortized balance of 2,700 crores, which is on account of gratuity. So it doesn't seem like a very big number. Also a recognition of deferred tax assets of 2,461 crores. So totally some emphasis of matter of about 5,000 crore. I don't think that's very big for a bank like SBI. But nevertheless, the auditors have chosen to put that up.
Lata, I'm looking at the corporate slippages breakup in the company's presentation that they've given. The total of the total corporate slippages of 29,037 crores, 17,435 have come from the stressed standard pool, 11,601 have come from others. Would that make any difference? 17,435 of the 29,000 corporate slippages, 29,000 crore worth corporate slippages, they've come in from the stress standard pool, while the 11,600 remaining have come from others.
Well, that looks a little worrisome because almost 60% of, say, 40% of the corporate slippage has come from the non-watch list.
Which is perhaps what explains the decline that we're seeing on the stock as well. From 6%, it is now up only about 3%, so lost about 3% from the top. Do you think that would be the reason?
I would think that that would be a spot of bother. We will wait for the company to clarify more. But out of 29,000, if only 17,000 is recognized, that means the balance
11,600 crores.
Okay, 11,000. That's not a small amount.
11,600.
11,000 crores.
Almost 6,700 is from telecom.
And
that was okay. That was one account which they had not recognized. So that was expected, perhaps. Okay, in that case, it sounds a little less bad.
4,200 comes from iron and steel. So that is there any account?
No, I cannot think of any account immediately. But all told, I guess now all the market will only worry whether the balance of the restructure, stressed but unrecognized, whether some more will slip. I think that is worrying the market just a wee bit. Out of 29,000, only 17,000 is from the watch list. The remaining is from outside the watch list. One telecom company has accounted for.
SDR and S4S slippages are at 5,662 crores. That's flashing on the screen for you. So of the 33,000 odd crores, about 5,700 crore is from SDR and S4S.
That is the whole thing. That's what they had in SDR.
No, they had about close to 12,000 crore in SCR and S4A put together. 5,825 crore and 6,100 crore. So that's close to 12,000 crore, of which, close to
all
half.
SDR has slipped into Q4.
So SDR was 5,825 at the end of Q3. So the entire SDR has slipped into
Has been
NPA.
recognized.
Yeah.
Okay. Slippages of 5-6 are from SDR and S4A, but they say that all the SDR has slipped, which means S4A has not been recognized just yet. Expect haircut. Okay. Well, I guess now the market will only want to hear from the company how much of the watch list is left, and whether that would also slip. In any case, I think a great deal is known. I don't see too much of downsides for the stock from here, since the bad news seems out in the open over there. I think you have to just take a break and wait.
All right, we will do that.